One Finance and Money Control present Personal Finance Unlocked. Download the One Finance app. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.
So, hi, I'm Aparna Ramachandra, founder director of RectifyCredit.com, India's first credit repair and credit advisory company, and very happily being associated now with One Finance to build the whole liability space in the personal finance domain. And we are together looking to set this whole communities, which is also looking at liability space. Liability in the personal finance space is a little different from normally what we see in the balance sheet or in the commercial domain. But in the personal space, liability is equally important because today you and I are not in most of us are not in a position to pick up any asset without the involvement of debt in it, a liability in it. So from that perspective, the whole importance or discussion about liability becomes very, very critical and very, very important. Now, to build your portfolio, you need to have a combination of both. If you default on an unsecured product, which is like a credit card or a personal loan, the damage is immediate and it is much more. Vis-a-vis, if you default on a home loan, also the damage is there, but it is less prevalent. The default ratio in the unsecured loan is way too higher than the default rates in the secured product. Now, when I say a debt plan, I would like to look at it in three different ways. One is when you just about start your this is your first job, you've just about started to earn and you are slowly going to be building your financial base. That time having a single credit card is very, very important and very, very essential, because unless you start with a credit card, the building of a credit portfolio, your debt portfolio, becomes next to impossible. But part of this debt plan, what is important is you always have at least one credit product which is going on, so that your credit history continues to be live. Stage number two, when you take on any kind of new debt, it is a commitment, right? So it depends on, if you're talking about personal loan, we are typically talking about 2 to 5 years. If we are talking about auto loans, we are talking about anywhere between 1 to 5 or maybe 7 years. If we are talking about home loan, it can be from anywhere between 25, depending on the age of the borrower, it could be 25 plus or at least 25 years. So the commitment horizon varies. Each person does his own homework, puts the figures in an Excel, does the math, and then figure out what is it that is feasible. Now, while it is very important that you have an emergency fund, it is also equally crucial that if you are servicing a very high interest debt, you try and repay that debt, right? So striking a balance becomes very important, but it is a very, very subjective call. But if I have to really answer this question, I would ideally advise that put in all that you have first to repay those loans, because for two reasons. A, once you repay, your cash flows ease. Two, tomorrow if you do not repay, you tend to default or delay in those repayments, your credit profile will take a bigger hit, and for whatever XYZ reason, later if you're looking for new loans, you are going to be in a suit. A credit card, if you are able to use it diligently, repay, manage it well, does wonders to your credit profile. B, The older your credit card is, what we call it as vintage, the older is your credit card, the older is your repayment history, better is your chance to get newer loans. See, having one card is mandatory according to me. It is very essential. But if you are someone who is very good with your credit cards, you are not into impulsive buying or swiping irresponsibly, then having more than one credit card is equally important, because all this together does wonders. There are cases where people swipe their credit cards to repay some other kind of smaller loans, or maybe loans against shares, or those kind of a thing. Now in this, you have to remember that a credit card, if you default, the penalty is almost 2.5 to 3% per month, which is compounded. So unless you are very sure that you are going to be able to repay the entire amount by the time your next bill is due, don't get into these large swipes to manage some other loan by swiping a credit card, because together you will get into a bigger soup. A, taking on loans or products which you don't need. B, signing up for something without even understanding what the consequences are. C, taking on loans which are very expensive just because you're not qualifying for a better rate, or your profile is not too strong. So signing up for something with a great confidence that I'll be able to improve my situation in 6 months and I can always switch to something better. And last but not the least is not having a plan in place, so you do not know how you are going to sustain this long term loan. Make a plan where you see how you can kind of manage your cash flow, manage your family budget in such a manner that you are at least able to do part payments, pre closures, so that this commitment starts getting reduced. According to me, this whole debt consolidation is a very fancy thing that has just about started in India. In the individual space, debt consolidation is really not a an option or a solution. Not an option, I will not say, not a solution. Because, see, what is debt consolidation? Suppose you have 5 loans going on, you are not able to manage these loans, you are continuing to default, you are continuing to make delayed payments, is where you would like to go and seek professional help, wherein somebody looks at this, puts it all together, and sees that there is like either one single loan that you continue to service, or they're able to go and renegotiate your payment terms so that you are able to sustain. Now where it can work is, suppose I have 2 or 3 credit cards, I'm paying them on time, but I know that in the long term this is going to get a little difficult for me. Or even better example could be a personal loan. So I have taken 1 or 2 personal loans at, say, higher rates of interest, and as of now I'm able to manage, but I know in the coming months it is going to start denting my cash flows. So I am then looking at some one single loan which I take on, and I prepay all of these and start repaying only that one single loan. Now all of this might be possible if I have a property to mortgage, wherein I can take a home loan and I use that money to repay all of this, and I continue to service that. Now, can you see how many ifs and buts are there in this whole episode? So it is um, a very theoretical concept, but debt consolidation in the personal space does not make too much sense. One Finance is the first company, the first platform in India which is talking about liabilities in the first place. Otherwise, till now, anybody and everybody that was talking about personal finance, advice on financial planning, or how to make your investment better, everybody was talking only about investment, investment, investment. There was nobody that was talking about liability. So One Finance is the first company that is talking about liabilities in the personal finance domain. So getting on to that discussion, building this whole community, this ecosystem itself is a first in India. The other beautiful thing that we are doing in One Finance is what is called as our money sign. So it kind of tells you already what kind of a personality you are. So knowing your money sign, knowing your traits already, you also know what kind of a person you are when it comes to your debt as well. So that kind of gives you a path. It gives you a broad guideline as to which way you need to be heading. We are looking at the whole piece holistically. So if any client that is wanting to sign up with One Finance, there is nothing that is seen in isolation. So there is no insurance that is seen in isolation. There is no mutual fund. There is no equity that is seen in isolation. The whole thing is one single package, and that is how it should be. So if I as an individual signs up with One Finance, I know for a fact that my taxes are going to be taken care, my investments are going to be taken care, my insurance is going to be looked at, and my liability is going to be discussed and advised. So this is a very innovative and a very right approach when it comes to personal finance. So I am only wanting and hoping that this whole thing really catches up and more people realize the criticality and the importance of this platform. In the coming days, there are going to be three scenarios that one needs to be prepared for, as far as I'm concerned, in the liability piece. Now, if whatever changes in the interest rate, or any kind of other mandatory charges, or things, one need to be planning that for that already, so that you are not taken by surprise, and it should not start to damage your cash flows month on month. B, there are going to be newer innovative products that are going to be obviously launched in the market, because as we speak, there are many more fintechs that are coming. Lot of banks are coming with different products. So one needs to understand, read the fine lines, and only then sign on the dotted line. Otherwise, don't sign up for something just because you need it. The agenda is very simple. Take a credit card, have loans or borrow loans if you need those. Do not sign up for loans when you don't need them. If and when you sign up for a loan, always, always, always make a plan as to how you are going to repay that loan. If there are loans like home loan where there is no pre-closure penalty, there is no any other charge on that, see how you can pre-close. It is very important that you make your own excel which is applicable to you. I think those would be my concluding remarks.
One Finance and Money Control present Personal Finance Unlocked. Download the One Finance app. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.